Are you thinking about buying your first home, but already feel a little bit overwhelmed about the entire process? Trust me, you're not alone. I meet so many first time home buyers here in Ottawa who tell me exactly the same thing. Where do I even start? That's exactly why I put together this video. Today, I'm going to walk you through a clear step by step action plan, the same framework that I share with my clients. So you can go from dreaming about home ownership to being fully ready to buy. We are going to talk about everything from getting pre approved for your mortgage to choosing the right neighborhood to saving for your down payment and even how to prepare for those hidden costs that often catch new buyers by surprise. And here's the best part, stick with me right until the end. I'll share a pro tip that has helped many of my clients save thousands of dollars, and it will give you the confidence to act quickly when the perfect home comes along. So grab a coffee, settle in, and let's get started on your journey to becoming a homeowner. So, why does this matter? Buying your first home is a big milestone and it can feel like a maze, especially with all that information out there. How do you know what to listen to, what to read, where to search? The good news, with the right preparation, you can navigate it with less stress and even have fun along the way. This is what it's supposed to be. This video breaks it all down into 7 simple steps. Think of it as your first time home buyer checklist. Step 1 is get pre-approved for a mortgage. The first step is all about understanding your numbers. I know the word mortgage alone can sometimes feel intimidating, but this step is where you take control of the entire process. A pre-approval isn't just about finding out the maximum amount the bank is willing to lend you. It's about figuring out what monthly payments you feel comfortable with, and that is a big difference. You don't want to end up with a mortgage that looks good on paper but stretches your budget so thin that you can't enjoy your new home. Here's how it works. A good mortgage professional, whether it's a bank or a mortgage broker, will review your income, your debts, your credit score, and a few other financial details. Then they'll give you a pre-approval letter, which will show the sellers and their agents that you're serious and financially ready to buy that house. That letter can make a huge difference in competitive situations because it tells everyone involved that you're not just browsing, you're prepared to make an offer. Another benefit of being pre-approved is that if interest rates are starting to trend lower, you can often lock in today's rate for 90 to 120 days. That means if rates go up while you're still shopping, you're protected. And if they go down, you may still be able to take advantage of that lower rate. So here's a pro tip. Don't just walk into your first bank and then accept whatever they offer you. Take the time to compare at least 2 or 3 lenders, or better yet, work with a mortgage broker who can shop around on your behalf. Even a small difference in your rate, say 0.25%, can save you thousands of dollars over the life of your mortgage. Just be careful though that you are not just rate shopping. This could be a big mistake. Think about the service you're getting from the mortgage broker, from the bank. This is very important. This step is like setting the foundation for your entire home buying journey. The better you understand your numbers, the more confident and less stressed you'll feel when you start your house hunting trips. Step number 2 is start researching neighborhoods. This second step is so important. Remember, you're not just buying a house, you're buying into a community and a lifestyle. Your home is more than just 4 walls. It's where your daily routines, your commute, or even your weekend plans will be playing out. Start by making a list of your must-haves. Think about things like commute time to work, access to transit, the quality of local schools, parks, green space, walkability, and of course, the safety. Also consider what's important to your lifestyle. Do you love being near restaurants, bike paths, or waterfront areas? Or do you want a quieter, family friendly street with a big backyard? Here in Ottawa, the neighborhood you choose can make a big difference in both lifestyle and in price. If you love a vibrant urban feel and don't mind a smaller space, look at Centertown, the Glebe, or even Westboro. If you're looking for a more affordable option with good schools and room to grow, you could explore Barrhaven, Kanata, and Orleans. Want a little more land and quieter vibe? Check out the rural communities such as Russell, Rockland, Carp, Greeley. There's tons of different neighborhoods out there. These areas not only vary in price, but also in the kind of lifestyle they offer you. A townhouse in Barrhaven may be more affordable than a similar one in Westboro, but your commute and neighborhood atmosphere will feel very different. I always encourage my clients to visit neighborhoods at different times of the day. Drive by in the morning to see what rush hour traffic is like. Stop in the evening to get a sense of the activity level that's going on, and maybe even take a walk on a weekend afternoon to feel the vibe of the area. These visits can tell you a lot more than just reading about an area online. You'll feel it, you'll see exactly what it's all about. Here's a pro tip. Once you've narrowed down your top areas, set up alerts on the MLS or your favorite real estate apps and websites. That way, you'll be one of the first to know when a home that hits your needs pops up in your chosen neighborhood. Being quick to spot a new listing can make a big difference in a competitive market like Ottawa. Step number 3, save for your down payment. This step is all about your down payment, which is often the biggest hurdle to purchase your first property. In Canada, the minimum is 5% for homes under $500,000 with a blended rate up to $1 million. If you can save 20% or more, you will avoid mortgage insurance premiums, which means lower monthly costs. Set up a separate savings account or a first home savings account, an FHSA, to grow your savings tax efficiently. Even better, automate those transfers each payday. Those small, consistent contributions really add up. And if it's in a separate bank account, that's even better. You won't be tempted to dip into it, especially as that amount grows. And if you can put it in a totally separate bank than your daily banking, that's even better. Out of sight, out of mind. If you're expecting help from family, have that conversation early so you can plan realistically. Make sure you know exactly what you're getting, find out the details, and be prepared so when the time comes, that information, that conversation has already been had. Step number 4 is to cut discretionary spending. This step is about creating room in your budget. Look at where your money goes. Things like subscriptions, Netflix, Spotify, Prime. Then there's the dining out, your morning coffee on the way to work, or weekend getaways. It's never the big ticket items, it's all the small stuff added together that can make a big difference. Redirect those savings to your down payment fund. This way, it keeps increasing your down payment fund without you even seeing it. Even an extra $200 or $300 a month could mean thousands more by the end when you're ready to buy. Here's a quick pro tip. Do what I call a test run of your future mortgage payment and monthly expenses. So let's say you take the amount of the house you're buying, let's say $700,000. If you're putting 5% down, that's $35,000. Your mortgage payment could be approximately $3,963. And again, this is based on today's number, a 25-year amortization, and a 5.25% interest rate. When you sit down with your mortgage broker, you will get an exact amount of what this mortgage payment would be. Let's assume the property taxes on this property are $5,000 a year. So that's about $416 a month. And then your house insurance is probably going to be roughly, again, roughly $100 a month. Your maintenance and repairs give, $300 a month or so, for a total cost of ownership of $4,779 per month. For your budget, don't forget about the utilities. We're talking about water, gas, hydro, internet. If you're buying a condo, it'll be condo fees, your groceries, your car payments, your car insurance, your gas, your cell phone bills, credit card payments, loans, and any other expenses you may have. Track every penny you spend for 1 month and see where all that money is going. You will be very surprised where all your money is going. A lot of times people, a couple of dollars here, a couple of dollars there, you don't see it. But at the end of the month, if you add it all up, you'll be very surprised at what you're going to find. Start setting aside the amount you expect to pay for housing just to see if it feels comfortable or not. If you're currently paying a certain amount for your rent, and then this amount here is $4,779, if it's a lot more and every month you're trying to put that money aside, and if it's not working out for your budget, you want to know before you put an offer on that house. Step number 5 is connect with a trusted real estate agent. Find a local real estate agent you trust. A good agent is more than someone who just opens doors to show you the properties. They're there to guide you, to advocate for you, and be a strategist in your home buying and offer process. They can help you focus on your search with the right neighborhoods, the right property types, the right homes for you and your family. They sometimes know about new listings before they hit the public market and can advise you when to act quickly or how to negotiate for that property. Here is a pro tip. Look for an agent who is experienced with first-time home buyers and ask about their approach to education, to support, and also negotiation skills. This is something that's very important. Another way you can find a good realtor that will match what you are looking for is ask your friends, your family, your coworkers who they used as a realtor. Were they happy with the experience? Would they hire them again? If the answer is yes, then there's a good chance it's going to be a good transaction, a good process. But if they say, no, I wouldn't hire my agent again, maybe it's time to move on and look for somebody else. Step number 6 is get familiar with the full cost of buying. This step wants you to make sure that you're budgeting for all of the costs, not just your down payment. You are going to need between 3 and 4% of the purchase price for your closing costs, such as legal fees, land transfer tax, inspections, and sometimes even appraisals. Also plan for future maintenance, property taxes, utilities, and insurance. Make sure you have all these numbers written out, planned out, so there are no surprises when you first move into the property. Here's another pro tip. Make sure you build a buffer for surprises because homeowners always run into a few good surprises. But if you're ready for it, it's not going to be such a big deal. Step number 7 is stay flexible and ready to act. Being flexible and ready to act is a huge part of the home buying process. The market can change pretty quickly. Don't wait for that perfect home. Focus on your must-haves, not just the nice to have. Remember, your first home is often a stepping stone. You can always and will most likely upgrade a little bit later on. Have your paperwork all ready so when you find the right home, you can make an offer confidently. Preparation is power. The more organized you are, the less stressful and more exciting the process will be. Trust me, I've seen both sides. Buyers that have no idea what they're doing and buyers that are prepared. Let me tell you, the buyers that are prepared, it's such a better process and a lot more exciting to buy that house. Taking these steps now, before you even start your home search, sets you up for success. You'll be ready to act fast and confidently when the right home comes along. Buying your first home can feel overwhelming at first, but with preparation, it becomes one of the most exciting milestones of your life. I hope this action plan helps you feel more prepared and less stressed. And let me know in the comments which step you're tackling first. I'd love to hear your story. Thanks for taking the time to watch this video. If you found it helpful, feel free to share it, hit the thumbs up, and don't forget to drop a comment below. And also don't forget to subscribe to my YouTube channel for more straight talk on real estate. I will see you in the next video, but in the meantime, if you have any questions about buying your first home, make sure to give me a quick call, or you can always email me at jeanricher@jeanricher.com. Merci beaucoup et bonne journée.